I'm feeling high.
Subscribe.
Alright, so you're welcome to this section of the training. Alright, we're looking at the synthetic indices. Okay, alright. Remember, the first video I made, alright, I introduced myself. This is Random Forex Solutions, and I promised to start up a new training on a synthetic indices. Okay, all right. So today, most of us have gotten used to the environment, and we are having the eagerness to trade. Okay, using our demo account. Okay, all right, because it's very important you start with your demo account. You don't just rush into your real account. Okay, you start with your demo account. Remember, you must have to understand the market properly before you trade with fund. All right, it's very important to understand how the market works, so that you will not go and lose your money. Okay, all right, so back to the lesson for the day. You can see the indicators. All right, the first and second layer of the indicator that has been built around the market, all right, which mimics the market 100%. Okay, all right, you can see it follows the market up and down, up and down, up and down. All right, so it goes up and down, up and down, up and down, up and down. You can see it from the previous markets. You can see how it follows the market up and down, up and down. Okay, don't worry, I'm going to give you the setup. Okay, I'm going to give everyone the setup. All right, so you can be able to have it and practice with it. Okay, and it will help you to figure out the movement of the market, and you can be able to spot out your entrance. All right, your entrance from your resistance zone and your support zone. All right, you can see I'm giving you everything raw. Okay, I'm giving you everything I've ever created. Okay, so if you've not subscribed to my channel, subscribe right away to my channel. Okay, and start following me so that you can be able to have a very good skill. Okay, a very good trading skill to help yourself, all right, become a successful forex trader. All right, I only give you the best. All right, I don't believe in doing too many videos. I give you only the best. Okay, all right.
Subscribe, like, comment, and share this video around the Forex community to help others achieve their dream.
I'm feeling high.
Subscribe.
All right, so from what you're seeing right now, look at the screen. Okay, you see that from the movement of the indicator, you understand that the market doesn't go only in one direction. All right, it moves in two ways. Okay, it moves in two ways. All right, up and down, up and down, support to resistance, from the support to resistance, from resistance to support, from support to resistance, from resistance to support. All right, so you can see we are on 30 minutes time frame. Okay, this is the market environment. Okay, this is a market environment. So the market keeps on moving from the resistance to the support, from the support to resistance, from resistance to support, from support to resistance. Okay, all right, so it moves the same way on from your 1 minute, from the 1 minute time frame straight to the, from the 1 minute time frame to 5 minutes time frame, from 5 minutes time frame to 15 minutes time frame, from 15 minutes time frame to 30 minutes time frame. All right, so the market keeps on moving until it gets to 1 day. All right, so when you see this kind of shape, all right, this shape you're seeing here on the screen, once you see this kind of shape on your 30 minutes time frame, 1 hour or 4 hours, even one day. All right, once you see a shape like this, once it curve to the resistance zone, okay, remember you must allow the market sell from the support zone to the resistance zone. All right, which is the, look at the overbought level, all right, of the market. This highest level is called the overbought level of the market. So it's very important to be patient enough for the market to finish exhausting its bullish trend. Okay, it's very important to be patient enough to allow the market exhaust its bullish trend. Okay, all right, so once you've seen that the market have exhausted its bullish trend, okay, to the overbought level, it has bought to the overbought level, all right, that's when you take your sell. That's when you start figuring out your sniper entry. All right, that's when you start figuring out your sniper entry. All right, look at a sniper entry here. All right, look at another sniper entry. Okay, all right, let's trace it by, you see the sniper entry I'm talking about. Look at another sniper entry. All right, look at another sniper entry. All right, look at sniper entry down. Look at sniper entry down. Are you seeing it? All right, look at another sniper entry. Look at another sniper entry. All right, both on your resistance zone and on your support zone, you can figure out your sniper entry. All right, that's where you start figuring out your sniper entry, because right now you can see from this point that the market has finished exhausting its bullish trend. Okay, and from this point the market will start consolidating. The market start consolidating from this point. All right, changing trend, trying to change trend, okay, to become bearish. All right, to become bearish. So from this point now, I'm going to switch to the 5 minutes time frame so that you can see what happens at this point. Okay, all right, so before we switch to the 5 minutes time frame, what we are going to do is to draw our two horizontal lines. Okay, let's put one here. All right, we'll put one here to show that this is the point the market is consolidating. Okay, then put another one on the second layer. All right, we have first and second layer, remember, all right, which the indicator is given to us. Okay, this is the first layer, all right, and this is the second layer of the market. All right, sorry, this is the first layer of the indicator and this is the second layer of the indicator. All right, so we've gotten our two straight horizontal lines, okay, cutting across each of the layers. Okay, all right, so we're going to, now we already know our midpoint. These are our midpoints. All right, this is our midpoint. Okay, so we now switch to our 5 minutes time frame so that we can be able to know where we are going to take our sniper entry, so that we can be able to figure out where to take our sniper entry. So we now switch to the 5 minutes time frame, all right, to spot out that particular point. Okay, to spot out the particular point. All right, of course you can see this is the point, okay, where we are to take our sniper entry. All right, so once you've seen this, okay, the next thing to look at for is the step down spike. All right, the pin bar and step down spike. All right, they works together. Okay, pin bar, you can see the market is made up of different pin bars. Okay, I seen it that was configured around the market. The pin bar is the fractals. Okay, I'm going to give you all of these setups. Okay, is the fractals. Okay, you can see where the fractals, all right, starts stepping down. Okay, here it was stepping up. All right, here it was stepping up. You can see, we call it step up spike. All right, you can see where the market is moving. Okay, the fractals keep on stepping up. The pin bar, or you're seeing here, keep on stepping up. All right, look at this point. Okay, this is the highest point of which the pin bar, all right, stopped. Okay, and starts stepping down. Okay, you can see We call it step down spike. So that's what you're going to figure out once you start seeing this step down spike. All right, this is very okay for you to enter. Okay, all right, because you can see, all right, from this point the market moves down, okay, and touch this line. Okay, that is to say that the market consolidated, all right, and moved down, okay, and retest on this second line, because we are looking at that retesting. Okay, all right, we want the market to retest on the second line, this second line here. All right, so that's where you take your sniper entry. That's where you need to take your sniper entry, guys. This is the best strategy so far. Okay, all right, once you can be able to spot out these two horizontal lines, all right, made up of the first layer of the indicator and the second layer on the indicator, okay, immediately switch to your 5 minutes time frame and spot out the market retesting on the second line, okay, not on the first line, on the second line. Once you've seen a retest on the second line, know that the market is dropping down. So you're expected to take your sniper entry from here, from this spot here. From this spot here, you take your sniper entry. All right, you can see how the market moves down. Okay, all right, you can see I'm even trading, so I'm on profits. Let me show you something. Okay, let me show you. All right, so you can see 30, 34, 34, 34, 34. All right, $34 times 1, 2, 3, 4, 5, 6, 7. All right, so that's where you should take your sniper entry. All right, that's where you're expected to take your sniper entry. All right, so you can see where the market started moving from. Okay, from here the market changed its trend, okay, to become bearish. All right, and move down. This is the point where the market is now. Remember, this is our 5 minutes time frame. Okay, this is the 30 minutes time frame. All right, this is our 30 minutes time frame. All right, we have switched back to our 30 minutes time frame, so you can see how the market moves. All right, and now we are on profit, serious profit. Okay, from this point here, I took my trade because what I figured out that the market has retested on this line on my 5 minutes time frame. So I took my sniper entry from here. All right, and it took me straight down to this point. Okay, so that's how you are expected to trade. Okay, all right, in summary, if you're using the indicator, it is very important for you to be able to figure out the consolidation trend of the market. All right, the consolidation trend of the market for the first layer and the second layer of the indicator. All right, you can see how it forms and consolidated downward to form a bearish trend. Okay, from here it consolidated down and form a bearish trend, okay, which it sold from here to this point. Okay, all right, that's number one. All right, so secondly, the next thing to consider is the step down spike with the pin bar, which can be easily spotted out from the 5 minutes time frame. You can see the step down spike here. All right, now the step down spike gives you the change of the market trend. Okay, it gives the change of market trend. Okay, all right, so you can see the step down spike here retesting on the second horizontal line. Okay, all right, causing the change of market trend. All right, so thirdly, if you want to take any trade, you must first of all consider the 30 minutes time frame up. All right, from 30 minutes time frame up should be considered first. Okay, all right, to 1 day, depend on the particular time frame you want to use, all right, to trade. All right, before considering the lower time frame. All right, so this next thing to consider is your entrance, which should be within the consolidation curve of the first and second layer of the indicator. Once you see it trying to consolidate, draw your first and second horizontal line immediately on your 30 minutes time frame at the first and second layer of the indicator and get your midpoint straight down to the nearest support zone. All right, switch to the 5 minutes time frame, then check the step down spike with pin bar on your 5 minutes time frame And once you locate the step down spike on your 5 minutes time frame, you immediately take a sell and place your stop loss and take profits. All right, so I'm going to be giving the setup right now, okay, just like I promised, okay, so that you guys can use it to practice on your demo account and improve to your real account, because this setup is a bomb. All right, okay, so I'm going to right click on my screen, okay, and get the setup. Okay, so we're going to start first with the fractals. Okay, so if you have your laptop, all right, you know how to enter it. Okay, from the side here you enter your setup. Okay, all right, but let's get the setup first. So those that have phones, okay, you can click on your F button, okay, and begin to enter it. Okay, we're starting from the fractals, so this is the setup for fractals. So I'll click on my fractals, okay, all right, and enter the setup. Remember, the color for fractals is blue, all right, dark blue. Okay, then choose the size you want. Okay, choose any size you want. All right, so that's for fractals. Okay, so for the Bollinger Band, let's go to Bollinger Band, first layer of the Bollinger Band. Okay, all right, this is the lower Bollinger Band. Okay, so period is 8, deviation is 0.100, apply to is low, then style is white. All right, then choose the size you want. Okay, shift is -2. Remember, shift is -2. Okay, so that's for the lower Bollinger Band. Then let's go to the higher Bollinger Band, okay, which the period is 8, deviation is 0.100, apply to is high, style is white. All right, then you can pick any size you want. Remember, shift is also -2. All right, so that's for the upper Bollinger Band. The only difference is that the lower Bollinger Band you make it low, and the higher Bollinger Band you make it what? High. Okay, all right, so that's the difference. Then let's go to the moving average, which is the last indicator. All right, the period is 50, method is simple, apply to is close, style is red, shift is 0. Okay, then choose the size you want. Okay, so that is it. All right, so key in this setup and begin to trade with your demo. Okay, practice with your demo and make sure you follow all instruction I've given here, all the process, all right, of how to figure out your sniper entry. All right, subscribe, like, share and comment, and let me know the topic you want to treat next. Put it in the comment section. Okay, all right, stay blessed and have a wonderful day.